Let's discuss the Fed's stance and how the world markets are reacting. It's pretty quiet across the US markets. Asia is largely holding up, but dots of green, no concerns really. Santosh Rao joins in with his quick take on Fed's move or non-move, I should say. Santosh, hi, good morning. Fed's played on expected lines as per the script, and the market reaction as well is pretty much along expected lines. What next, Santosh? Does it seem like a July policy hike or rather cut is a given, because they've said that they are going to maintain a patient stance, they're keeping a close watch on all the monitorables, and they will go in for a rate cut eventually?
Right. Yeah. Thanks for having me. I think Fed pretty much signaled that the needle definitely moved more on the dovish side. I think the market is pretty much accepting the fact that the rates will cut. They will cut once, at least in July, if not in September. So one cut is for sure. That's the way the market's looking at it. So in a way, it's not exactly what Trump wants. I mean, Trump wants a 100 basis point shift, but he's not going to get that. But I think this is definitely better. But, you have to realize, and people have to realize that, cutting rates is not necessarily a good thing. It shows that the economy is slowing down. Things are slowing down. And that's not really good when you really put it in the right context. But as of now, I think we don't want any slowdown. We don't want the Fed to come in and really slow down anything just because of rates. The economy is holding steady. I mean, the data recently was not that strong. The labor unemployment was the employment numbers were not that strong, rather, and the consumer prices were not very weak as well. So overall, it's kind of softening, but we don't know whether it's a trend or it's a pattern. It's permanent, kind of. It's temporary or a trend. We don't know that. So we'll wait and see. But at this point, I think this is the right thing. It's in line with expectations. Hopefully, the economy will continue, and the rest of the world will also kind of not go down in a funk and kind of stay up there, and if not move up more.
Since you touched upon Trump, it seems that one factor he's completely ignoring is the kind of impact the trade tensions and the trade war that he's launched with China, how they're impacting sentiment and weighing on potential growth as well. Is that something that the Fed is also keenly going to be watching out for? Or is July imminent? with regards to growth concerns going forward, what are the key factors they're going to be tracking?
Yeah, in fact, that was one of the questions he was asked. If the G20 meeting at the end of the month, and if the trade talks and the trade battles, trade war rather, looks like it's going to be settled, go in the right direction, he may not cut the rates. We may not need to cut rates. So I think at this point, and he said that, and it's not a given, but at this point, they're watching everything. He said, I think that's a big thing. He said, they are not very pegged into something. They are going to be very flexible, and it's not permanent. So I think that's the main thing. He said he's going to be more flexible, and that, I don't know the exact word he used, but I think that he introduced that word, which shows that he is more he's open to cutting rates in the future. So I think that's good. The trade is a big problem. Europe slowing down is a big problem. Australia may be on the edge. Emerging markets overall kind of on the soft side. So I think it's very important that the U.S. settles the trade battles. We don't need that. China is the second biggest economy in the world, and we don't want that slowing down. And it has already. So the last thing they need is a trade war. They're already going through their own structural changes, that, so to speak. So I think at this point, we need to help them out, or U.S. does. But I think Trump is not going to just give up. He wants a structural change overall. He wants a level playing field. It's more than just dollars and cents. It's more than the election. He wants a long-term change in the way China does business. So that's going to take some time. Hopefully, he said he had constructive talks with the president of China. So hopefully that will lead to something by the end of the month. So we'll wait and see. But it's important that they settle the trade dispute.
Santosh, if I look at the setup, equity markets, so S&P at a record high, gold at a multi-year high, and US 10-year paper at a multi-month low. The three markets are telling you different things, aren't they? It is so confusing to look at the screen and say, how do I judge whether equity market is right, or gold is telling me the true story, or the 10-year paper is telling me what is coming next?
Yeah, I think pretty much they're factoring in lower dollar. I think interest rates going down, so you're seeing the gold going up. That's a safety trade anyway. So I think you're going to see you're getting a lot of mixed signals at this point, but we'll see where it settles. I mean, at this point, looks like interest rates are coming down. Dollar will weaken a little bit, and so I think that's what you're seeing play out. But in a way, that's good. That's what he wants. He doesn't want, in fact, after what Draghi said, he's going to lower the rates there and make it more, he's going to ease more. I think Trump doesn't like that. He's saying it's not going to, it's going to make it an uneven playing field. He wants the Fed also to be cognizant of that. So a lot of cross currents going on at this point. So I think I would wait and see. It's not a given at this point. It's not a magic wand cutting rates, and we'll see whether it stays. But at this point, the market is getting what they want.
We can say so far so good. Santosh, great chatting with you. Thanks so much for taking the time out and
Thank you.
speaking with us today.